Good morning, everyone. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities, and welcome to Monday Minutes. First full week in May, we've transitioned now to a reopening of the economy in phases, obviously with safety front and center. Florida will be the biggest state today to begin their reopening process in phases. And the reality is, at the end of the week, we will get the first significant employment number since coronavirus hit. Obviously, Thursday we'll get another claims number, but we're really balancing things on two fronts right now, health and economics. And when we look at the economic data, we look at the devastation on the employment side, and we try and project. We look at equity markets, we try and project earnings, we try and project where this economy will be. It's really impossible at this point to understand where we're going to be 3-6 months from now until we start that reopening process, obviously very safely and slowly. We think it will be a slow reopening of the economy. And the reality is, if you look at some of the states, my state included, New York, which still has stay-at-home orders. You look at some other states that are still with stay-at-home orders. A good part of the GDP for the country will still be closed here for the next at least couple of weeks to perhaps the next month. So the reality is, we do think the reopening is significant. We do think it will be slow in nature and uncertain at times. So when you look at the equity markets, you look at the rally that we've had really since the end of March, off the back of central bank liquidity, monetary liquidity, fiscal liquidity, and keep in mind, we do consider this to be liquidity. We're looking at roughly between the fiscal side and the monetary side and the programs that are in place from the Fed right now of roughly $7 trillion geared in liquidity toward this marketplace. But for equity valuations, there's still a lot of uncertainty. There's a lot of uncertainty in terms of the speed of the reopening, the success of the reopening, and clearly things on the demand side. So we've sent out charts on the S&P 500, the upward channel since March, with the sell-off of the last couple of days, clearly threatening that upward channel. When you look at 10-year yields, we're back toward the lower end of the range. Middle of the week, we will get the Treasury refunding announcement, 3s, 10s, and 30s. If you look at the issuance that we've seen in cash management bills and T-bills on the short end, you look at the Treasury's general account, obviously as more programs come online here on the fiscal side, the demands in terms of funding from the Treasury side will increase. So we would expect a slight uptick in issuance sizes, in particular in 10s and 30s, middle of the week. All eyes will be on the reopening to start the week, and then toward the end of the week, the employment numbers. I'm Greg Faranello, and this is Monday Minutes.